All right, drama-filled day in the market. Anything semis related, anything AI related was down big time. And then we're in the middle of earnings season, so quite a few stocks went up big and down big on earnings. One of those stocks that went down big today was SoFi. I made a video about a week ago saying that SoFi was about to start its next upward tear because of the great things that they were about to report for a Q4 2024, full year 2024, and then their guidance for full year 2025. The thing that I didn't talk about a lot was guidance for Q1 of 2025 because I'm not a super short-term focused guy. I'm more of a long-term focused investor. So I want to talk about all the things that happened with SoFi stock inside of their earnings report, the great stuff, the good stuff, the bad stuff, whether or not my outlook has changed for the better, changed for the worse, etc., and what I did personally with the stock today. I'm really excited to dive into the earnings report, get nitty-gritty, and talk about why SoFi dropped and what SoFi is looking like for the next 12 months. But first, if you're new here, welcome. I'm Austin. I'm a co-owner of cloudmusicsuite.com. I'm also a stock market investor, and definitely most importantly for this video, I am a long-term SoFi shareholder. It is my second largest position in my entire portfolio. I've been a shareholder for many years, and I plan to be a shareholder for many, many more years to go in the future. What happened here today with SoFi stock can be used as a case study for long-term growth investors in the market. I've seen situations like this happen with many, many stocks over the years, and someone who's maybe newer to the market or newer to their position might feel like they want to sell into the weakness. Maybe someone bought, it's inevitable, someone bought at $17, $17.50, $18, and now the stock just a few days later is sitting in the low $16 range. So people can get really discouraged if they don't know what's going on with the market dynamics and they don't dive deep into the earnings report. I took the opportunity earlier today to use this moment with SoFi stock as a case study for long-term investors. This doesn't just apply to SoFi stock, it applies to tons of growth stocks out there. So if you want to get access to that post, consider becoming a member of the Patreon. I'll put it in the pinned comment down there and the first link in the description. It's a really important post for anyone who's a long-term investor in the market, especially anyone who's a long-term growth investor. One last thing before we jump in, we're really close to hitting that 6,000 subscriber mark. So if you're not subscribed already, go ahead and click that subscribe button. It's free to do so, and you'll help us out on that short-term goal of hitting 6,000 subscribers. I appreciate you doing that in a major way. Let's jump into the video. So I actually want to start first with an overview of the day, not getting nitty-gritty, and talking about what was the thing that made SoFi stock drop. And then if you want to hang around and you're a dedicated SoFi shareholder and you want to hear my takes and my opinions on all the details and the numbers, then we can do that after, but I want to talk about the price action and what caused it first, because that's probably why people are on this video. So the short story is Q4 results were amazing. GAAP EPS beat like crazy. Non-GAAP EPS beat by roughly 1 cent, more than a 30% upside surprise on the EPS numbers, which makes their full year EPS 13 cents. That's much, much higher than they forecasted 1 year ago before full year 2024 started. So they're beating their own expectations like crazy, over a 60% beat from what they expected on the top end at the end of 2023 when they provided guidance for full year 2024. They beat on revenue once again in Q4 and full year 2024, and their low cost, high margin fee-based revenue was up 63% year over year, all the way up to $289 million. And this extremely short and sweet quote from Anthony Noto, SoFi's CEO, pretty much sums up 2024. 2024 was SoFi's best year ever. I agree with him 100%. Factually, it was SoFi's best year ever. So not only was Q4 2024 great and full year 24 great, but also the full year 2025 guidance is really, really strong. It's stronger guidance than I thought they would give for full year 2025. And I know that their general tendency is to sandbag these full year numbers a little bit so they can come in and beat those numbers like crazy and make Wall Street happy, make shareholders happy. They expect somewhere between 23 and 26% revenue growth for full year 25, which is very, very strong still. They're expecting the EBITDA margin of 30%, which is up 3% year over year. That's a big time increase. And look at this. They expect GAAP net income of 285 to 305 million with an incremental margin of 20%, which equates to GAAP EPS of 25 to 27 cents. I was expecting somewhere like 21 cents. So they're already way above my expectations, and none of these quarters have even played out yet. And like I said, they are typically sandbagging, meaning they're putting out slightly lower numbers than what they actually think they're going to report, so they can come in and crush those every single quarter. So everything's been good in the SoFi earnings report so far. There's literally one sentence in the 33-page document from the earnings report. There is one sentence that made the stock drop today. And I want to read that one sentence to you real quick. In the first quarter of 2025, management expects to generate 725 to 745 million of adjusted net revenue, 175 to 185 million of adjusted EBITDA, and 30 to 40 million of GAAP net income, which equates to 3 cents of GAAP EPS. So sequentially, that's either down or roughly flat on revenue, which the market did not like to see. And sequentially, that is down on the EPS substantially on the GAAP numbers. On the non-GAAP numbers, it'll be down roughly 2 cents if they come in with that 3-cent EPS in Q1. And if they come in with those numbers, adjusted EBITDA will be down as well sequentially. When I say sequentially, I mean quarter over quarter, from Q4 2024 to Q1 of 2025. So that one sentence is what made SoFi stock drop over 10% on the day. If you look at any headlines, it's saying weak Q1 guidance, weak Q1 guidance, weak Q1 guidance. Everything else is extremely strong, but they've got weak Q1 guidance. So let's think, if they have extremely strong full year 2025 guidance, but they have weak Q1 guidance, does it actually matter for the long-term growth story? Absolutely not. Anyone who is a long-term shareholder of SoFi should not be worried at all about one weak quarter. Every company is going to go through a few weak quarters. To be honest, that's still not a weak quarter for SoFi whatsoever at all. Yes, sequentially it does not look great from Q4 24 to Q1 25. Assuming these numbers are what they report, it's totally possible that they're sandbagging these numbers like crazy and they're going to come in and blow this quarter out of the water. We've seen SoFi do that many times. They've strung together one of the longest strings of beats on EPS and on revenue that we've ever seen from a public company. But just remember, it was not retail out there selling today. Some people might have panicked and sold into the weakness, unfortunately, but this was Wall Street, because Wall Street likes to worry about the next 2 to 6 months way more than they like to worry about the next 2 to 6 years. Myself, I do not care what happens in the next 2 months with SoFi stock. I'm not selling SoFi within the next 2 months. I care what's going to happen within the next 5 or 10 years with SoFi. That's my time horizon with SoFi. Not months, but years. Any long-term investor who's gotten any type of respectable, substantial returns in the market by individual stock picking will tell you they do not care about the short-term stock price movements. The only thing that happens with short-term stock price movements for a long-term shareholder is if the stock goes down, they buy more. That's it. If the stock goes up, they hold and they enjoy the gains, and they hold for the next 5 or 10 years. It depends on the stock. Not every stock is a 5 or 10 year hold, but for me personally, SoFi is one of those stocks. So I do not care that they're going to have a weak Q1. I don't even think they're going to have a weak Q1. I think they're sandbagging this and they're going to be totally fine. It's absolutely a Wall Street overreaction, and it's important to understand this for any stock out there, especially growth stocks. People expect literally perfect quarters. Anytime a stock is up substantially, they're going to expect a perfect quarter. SoFi was up over 100% in the last 6 months. So they kind of had to have a perfect quarter on every single thing in order to have the stock price go up. There's one sentence, like I said, that was weak, therefore the stock price went down. Okay, I hope that gives some clarity around why SoFi dropped and how silly it is. And if you're not a shareholder already, or if you're looking to increase your position, now might be a good time. You just got a 10% discount. For more details and commentary on that, go ahead and get access to that case study post I put on the Patreon with the pinned comment down there or the first link in the description. If you want to stick around for all the specific details, I'm going to dive into the numbers here from the Q4 report, and we'll start at the very tip top with the headline numbers. SoFi reports net revenue of $734 million and net income of $332 million for Q4, demonstrating durable growth and strong returns. Okay, when I saw that $332 million of net income this morning, my eyeballs almost popped out of my head. I had to scroll down like immediately. I knew there was some kind of one-time benefit, and that one-time benefit was deferred taxes. So really, when we look at the net income numbers, although that $332 million is the GAAP number, when we look at the non-GAAP number, it kind of tells a more true picture. I don't normally look at non-GAAP numbers, but in this case, since there's that one-time benefit, I think it's better to look at the non-GAAP numbers in this case. So non-GAAP net income was $61 $1 million, which makes a lot more sense. Still a very impressive number, which equates to about 5 cents of EPS. That's up 150% year over year. That 5-cent EPS number for Q4 brings their total for full year 2024 to 13 cents. The upper end of the range for guidance that they gave at the beginning of 2024 was 8 cents. So they beat that substantially. I expect that they'll do that again. We'll talk a little bit more about guidance, but we saw those guidance EPS numbers. I think they'll come in and crush those EPS numbers. Forward PE for SoFi is way better than it looks whenever we look at like Seeking Alpha numbers or Yahoo Finance numbers or whatever you use for your statistics. I think with their very strong trend of beating earnings every single quarter and sandbagging their numbers a little bit, I think we're about to see well into the 30 cents of EPS with SoFi in full year 2025. GAAP revenue in the quarter was up 19% year over year, and the full year 24 numbers in comparison to full year 23 numbers, revenue was up 26%. Very impressive. Adjusted EBITDA was up 9% from Q4 23 to Q4 24, and then full year 24 comparing to full year 23, adjusted EBITDA was up 54%. And one of the really big things from this quarter is that SoFi has now reported 5 consecutive quarters of GAAP EPS being positive. And full year 24 was the first full year that they had with positive EPS. So they are now eligible for S&P 500 inclusion. I'm not saying that that's going to happen next quarter or next rebalance or anything like that, but it's probable that it's going to happen sometime within 25 or the first half of 26. There's a lot of regional banks in the S&P 500 that are a lot less exciting than SoFi. They had some extremely impressive product highlights, which I'll put on the screen here for you to check out. Feel free to pause the video and check out anything you'd like to see. But one thing I want to highlight here is that student loans saw their best quarter of originations since the end of 2021, a 71% year over year increase all the way up to 1.3 billion. And then home loans also saw its best quarter of origination since 2021 across all products. Purchase, refinancing, and HELOC, originations of 577 million and 87% year-over-year increase. So this is good news from a profitability standpoint because the majority of SoFi's profit is coming from lending right now. It's not going to be like that over the long term, but it is a very profitable segment. So we're already seeing the benefits of rates coming down a little bit and people feeling more comfortable with taking on new debt, refinancing that debt from their student loan to a lower rate and going out and getting a new mortgage, refinancing their mortgage to a lower rate, etc. That's big for SoFi. They are a big refinance target lender. One last thing before we move on from this, I always like talking about the tech platform. They seem to be making some great progress on getting those larger, durable clients for the tech platform. Check it out. Tech platform signed several new partnerships across a broad range of industries, and Galileo was selected by the U.S. Department of Treasury as the processing partner for Direct Express, which is a prepaid debit card program which provides millions of people access to federal benefits. The company also signed a large retail financial services provider of short-term consumer loans, card services, check cashing, and other products. Lastly, we signed a leading hotel rewards brand for a new co-branded debit card program. All of those things are great for tech platform numbers, and since that's fee-based revenue, the more connected accounts they get on there, the better. The unit economics of that are very, very attractive. All right, let's dive into the 3 different segments. We'll do financial services segment results first. Fourth quarter of 2024, financial services segment net revenue grew to $256.5 million, which is an 84% increase from the prior year period. Net interest income of $160.3 million increased 47% year over year. Non-interest income of $96.2 million increased a crazy 220% year over year, which represents nearly $390 million of annualized revenue. That's amazing. This segment is their largest growing by a long shot, and with their capital light fee-based model that they've got going on, this is going to be a huge deal long term. For full year 24, financial services segment net revenue grew to $821.5 million, which is up 88% from full year 2023. And that breaks down into net interest income, which was up 71% year over year, and then non-interest income, which was up 144% year over year. And those were all full year numbers comparing 24 to 23. And then guys, look at these segment results here. On the left side, we have Q4 of 2024 compared to Q4 of 2023. On the right side, it's full year 24 compared to full year 23. Total revenue for financial services is up 84%, while directly attributable expenses are only up 32%. So that means that the contribution profit is about to explode higher. They went from $25 million of contribution profit in Q4 of 2023 all the way to $114.8 million, which is a 358% year-over-year increase. And the contribution margin on financial services is now 45%. That's ridiculous. That's up from 18% just 4 quarters ago. And in full year 2023, financial services segment was not even profitable, and now they're all the way up to a 37% margin in full year 2024 from the financial services segment. This management team is something special. I say it every single quarter, but Anthony Noto and the team are no joke. And once again, financial services product ads were crazy in the quarter. SoFi Money up 51%, Invest up 6%, Credit Card up 14%, Referred Loans up 54%, Relay up 39%, and then SoFi at Work up 31% for total products in the financial services segment up 34%. Moving on to technology platform results. Tech platform segment revenue was $102.8 million for the fourth quarter, which is only a 6% increase year over year. Not what we love to see. Contribution profit of $32.1 million increased 5% from the prior year period. Also not great growth numbers, but they've got a contribution margin of 31%, which is pretty respectable for the tech platform. The full year numbers for the tech platform look a lot better than the Q4 numbers did. For full year 24, net revenue of $395.2 million, which was up 12% year over year, and then contribution profit of $127 million, increased 34% year over year, for a contribution margin on the full year of 32%. It seems like with the larger, more durable clients that they're going after for the tech platform, the quarters are going to be up and down a lot more. Sometimes the quarterly growth is going to be in the single digits. Sometimes the quarterly growth is going to be like 25 or 30%. They've got these 3 major deals that they signed. These are big time deals, and they say that the revenue is going to start to hit in 2025, and then a lot of the revenue is going to start to hit in 2026. So they'll see the full impact of this in 2026. These are longer sales cycles that take quite a while to get all the connected accounts onto the tech platform, and that's where they're going to bring that fee-based revenue in. So 2025 should be a big time year for tech platform, and then 2026 should be the biggest year for tech platform ever, which is great to see. They don't really need the growth from tech platform right now in order to fuel the full growth of the entire company, because they've got that financial services growing at more than 80%, and lending is pretty dang strong right now, way stronger than they expected, and it's going to get a lot stronger as rates come down. So the tech platform being up and down a little bit is not the end of the world, as long as they keep those contribution profit numbers very, very strong for the tech platform. I'll be happy, and as long as we see big time growth numbers back half of 25 and the beginning of 26, I'll be happy with the tech platform. Moving on to the final segment, which is the lending segment. This is where most of the profit from the company comes right now, and it's where the majority of the revenue comes from as well. Fourth quarter 24 lending segment revenue was $417.8 million, which is up 18% from the prior year period. And full year 24 comparing to full year 23, we had revenue of $1.5 billion, which increased 8% from the prior year period. Those numbers might not sound amazing, but when you realize that the guidance for full year 24 was that revenue would actually be down for lending, they said somewhere between 92 and 95% of 2023 numbers, which means the revenue would be down on the lending segment. But now we just saw an 8% gain on a yearly basis. So they took the conservative stance, and then everything played out way better than they thought it would. So they've got growth in the lending segment when they forecasted for somewhere between 92 and 95%, and then they brought that up mid-year to say, hey, we're probably going to be flat in comparison to 2023 numbers. Now we see the end-of-year results up 8%, very respectable. I'm glad they were able to weather those high rates and thrive in that environment, still growing. It's rare for a lender to be able to grow in a high rate environment time. SoFi was able to do that. That's very impressive, and the lending numbers are about to get really, really strong as rates continue to come down. Origination volumes are all up massively. Left side is comparing Q4 this year to Q4 last year. Right side is comparing full year 24 to full year 23. Personal loan originations up 63%. Student loan originations up 71%. Home loan originations up 87%. Full year personal loans up 28%. Student loans up 44%. And home loans up 82%. We already talked about the guidance numbers earlier. The full year 25 guidance numbers are very strong. The Q1 25 guidance numbers are down sequentially on revenue, on adjusted EBITDA, and on EPS based on what they gave us and what they expect for Q1 2025. They might be sandbagging those numbers, but they genuinely might see a very weak Q1 2025 in comparison to all the other quarters they had. Since they see a very strong 2025 still, that means Q2, Q3, Q4 are probably going to be extremely strong for SoFi. I'm not worried whatsoever at all. I do want to talk about something I didn't talk about earlier in the video, which is some macroeconomic assumptions that they're using to make their guidance. First, they expect an interest rate outlook consistent with the forward curve and just north of 1.5 rate cuts. GDP expansion of 1 to 2%, which is pretty conservative, normalization of unemployment in the 5% range, and continuation of normalized credit spreads across capital markets and stabilization of consumer credit. I like how they always take the conservative stance when it comes to their macroeconomic assumptions. That means if anything goes better macroeconomically, then they are set up very well to crush their numbers. Wall Street likes a stock that comes in and beats their revenue and beats their earnings every single quarter. SoFi is that company. They're going to keep doing that. Beat the numbers, raise the guidance. Beat the numbers, raise the guidance. A triple beat is how you get a stock to go up every single quarter. It's not realistic for a stock to go up every single quarter. Stocks don't go up in a straight line, but Wall Street wants that. Wall Street wants to see every single quarter we get good news and good news and good news. Long-term outlook stuff, Wall Street, it seems like they don't even listen to that stuff. They don't even care about that. All they care about is the next 2 to 6 months. If we're in a raging bull market, sometimes they'll look out 12 months or 18 months, but it's very, very rare. Right now, I would say they're looking out 2 to 6 months. So what do I think about the earnings report overall? Very strong. The tech platform was a little weak, but the things they've got in the pipeline for full year 25 and 26 with getting those 3 huge clients on the platform, it's going to be a big time year, especially in the back half of 25 and 26. Financial services, I can't say enough amazing things about that. The growth there is ridiculous. Lending, I'm very impressed with what they were able to do given the macroeconomic environment. And I'm really excited to see how they're going to be able to navigate this as rates come down more and more. Those originations are about to explode higher, and the revenue and contribution profit is going to follow after that. Very strong quarter, best in SoFi history, best year in SoFi history, and SoFi is set up to potentially get added to the S&P 500 sometime within 2025 or 2026. That'll be a huge feather in SoFi's cap, and we know that typically S&P 500 inclusion is very good for the stock price, so I'm not mad about that either. I didn't buy any more shares today. I'm already up over 130% on my shares. I'm very happy with the allocation I have. It's an extremely large position for me. It's the number 2 stock in my entire portfolio. I definitely did not sell into the weakness, but I also didn't buy today. If we got the stock dropping to like $12 or $11, I'd be picking up shares like crazy. But for now, I'm just hanging out with my shares. I'm not worried about picking up new shares right now. I was picking up shares like crazy when the stock was low single digits. That's when I was buying like crazy. Now I'm just holding my shares, hanging out for the next many, many years. Unless we get some kind of crazy price action downward, then of course I would buy. If you made it this far in the video, I appreciate you being here greatly. I hope you enjoyed it. Let me know what you think about SoFi's earnings report in the comments below. Definitely one of my favorite parts of posting here on YouTube is having some conversation with you guys down there. So looking forward to seeing that. Thank you so much for being here. Have an amazing day.